Okay, FR students, before we attempt these MCQs, let me just tell you one thing. At Abili School of Accountancy, once you enroll yourself in FR, you will be getting the entire regular course. Along with the regular course, you will also get the crash course. In our FR crash course, within 30 hours, we have covered each and everything. All the ISS, IFRSs with practice questions, with homework, and you will also be getting the WhatsApp support. Let us discuss these questions and then I'll give you more information. Question number, I would say 1. This is on IAS 16, property, plant and equipment. Identify whether the cost listed below should be capitalized or expense. Whenever the term capitalized comes, it means that particular thing becomes your asset. Okay. IAS 16 property, plant and equipment requires an asset to be measured at cost on its initial recognition. We know that under IAS 16, initially you will keep your property, plant and equipment at cost. Later on, your company will have two choices. One, you can still keep your property, plant and equipment at cost, or you can go for a revaluation model. Whichever model suits you, you can choose. EV use its own staff assisted by contractors when required to construct a new warehouse for its own use. Identify whether the cost below should be capitalized or expensed. Excuse me. Clearance of site prior to the commencement of the construction confirm capitalization. Without clearance of a site, how can I start the construction? And main concept is, if I'm incurring a cost which actually relates to that construction of the warehouse, so obviously I will capitalize. Professional surveyor fees you have to capitalize. Managing the construction work. EV own staff wages for time spent working on construction. Again, you can properly read cost number 3 is also relating to the construction. A proportion of EV's administration cost based on staff time spent. If you read this, proportion of EV's administration cost, basically I'm just apportioning a part of administration cost to this construction. I cannot capitalize this. It is not the cost which I have incurred just because of the construction. So I have to expense out. Okay, fine. Let's move. Go ahead. What is the total charge to the statement of profit and loss in respect of the decommissioning for the year ended 30th June X5? When I'll be basically solving this question number 2 for you students, I will also explain how easily students, they make mistakes and they end up by getting undesirable marks. And any marks which is less than 50, they are undesirable. At least every one of us needs 50. Any marks which are over and above 50, they are obviously more than welcome. But at least everyone needs 50. What is the total charge? Read the requirement nicely. They're asking what is the total charge to the statement of P&L in respect of decommissioning. First of all, when it comes to decommissioning, step 1, we calculate present value of the decommissioning cost, and the double entry is property, plant and equipment debit, provision credit. The debit is property, plant and equipment. On that debit, we apply IAS 16. Credit is provision. On the credit side of that double entry, we apply IAS 37. Under IAS 37, whatever the provision initially we have recognized, then subsequently due to unwinding of discount, the value of the provision will increase and the finance cost will also increase. Obviously, finance cost I'm going to charge to the P&L. But whatever the finance cost, you and me will calculate. And if we say that finance cost is the only answer, but then it's going to be a partially answer, it will not be the correct answer, because the question says total charge. Total charge means if you look at the entry in day 1 where we have debited, let's say, property, plant and equipment and credited the provision. Due to unwinding of discount, value of the provision will increase and the finance cost will also come in our books. Second, you have to depreciate that debit value also. So logically, the total charge due to decommissioning cost will be the depreciation expense plus the finance cost which will arise due to unwinding of discount. Now let's read the question. On July X4, stop. July X4, we are working for the year ended 30th June X5. It means from July X4 till 30th June X5, the time period is exactly 1 year. It means due to unwinding of discount, whatever the finance cost comes, that has to be for 12 months finance cost. Similarly, the depreciation expense will have to be for 12 months depreciation expense. Okay. Experimenter, experimenter opened a chemical reprocessing plant. The plant was due to be active for 5 years until 30 June X5. The life they have given us 5 years. Excuse me. When it would be decommissioned. When it would be decommissioned. At 1st July X4, the cost of decommissioning the plant were estimated to be 4 million in 5 years time. July X4, we are saying the cost will be 4 million, but this 4 million is not a today's cost. This 4 million will be bearing in 5 years time. Experimenter consider the discount rate 12% is appropriate for calculating the present value, and discount factor 12%. They have given us a 5-year factor 0.567. Calculator, I have it. Luckily, step 1, we need to calculate the present value of decommissioning cost. So 1st July X4, let's take 4 million, multiply by 0.567. Let's see what we are getting. 4 million. Excuse me. 0.567. 2268000. Logically, the double entry will be property, plant and equipment debit, provision credit. Let's credit the provision. And don't forget this entry we are preparing, we are recording on 1st July X4, start of there. Now 30th June X5, year end, we have to depreciate this property, plant and equipment. Depreciation expense. Life, they have given us 5 years. Students, depreciation, I'm getting 4,53,600. But again, 4,53,600 is not our only answer, because examiner did not ask what depreciation expense you will charge to P&L due to decommissioning cost. Examiner is asking us what is the total charge relating to because of decommissioning cost. So total charge will be the sum of two things. One is depreciation expense, second is finance cost. Due to unwinding of discount, the finance cost will arise. So unwinding of discount. Simply provision. Let's take 12% of that. Student, I'm getting 2,72,160. The double entry of this unwinding of discount is finance cost debit by 2,72,160 and provision will be credited by 2,72,160. The total charge which will go to P&L is the sum of depreciation expense plus the finance cost. I'm getting, students, 7,25,760. This is your total charge to the profit and loss. Choice B. If any one of us selects A, it means you are selecting the depreciation expense, which is incorrect. If you are selecting C, it means you are just directly dividing 4 million by 5, you are getting 8 lakh, which is incorrect. If you are opting D, it means you are just opting the provision amount which is coming in day one, which is absolutely incorrect, because they are not asking the provision amount in day one. The question being asked is, what is the total charge due to decommissioning cost? Let's see one more question. Okay, we don't have one more. Okay, now quickly, I just want to explain few more things. Student, what exactly Abilu School of Accountancy offers you in FR? Once you enroll yourself in Abilu School of Accountancy in FR or even in any other paper, but right now I'm talking about FR. In FR, we are the only institute, we will provide you the detailed notes as well as short notes. In FR, we'll be providing you the entire pre-recorded classes of the entire course. Plus, we are the only institute, we will provide you the crash course as well. and within that crash course, just within 30 hours, you can complete the entire course. Plus, we are the only institute, we offer you the best and fastest WhatsApp support. Plus, we are the only institute, we provide you the relevant topic related homework. And we are the only institute, we conduct your mock at least, I would say, 12, maximum 15 days before the exam, and we provide you the personalized feedback. We are the only institute, we actually guide you how to get the maximum benefit from ACCA pre-scene mock. So students, then what are you waiting for? Enroll yourself right now in FR, in any other paper at Abilu School of Accountancy. Then leave the rest on us. All you need is just follow our instruction and you are going to get very easily your desirable marks. All you need is just enroll yourself at ASA and then see how the magic will happen. And I bet you it will happen. All you need is enrolled. That's it.